Hi, I'm Isabella and this is an explanation of petty cash. There are many instances in a business setting where an electronic transfer or check is not suitable or accepted for payment of goods or services and instead cash is needed for a transaction. This may include purchasing office supplies or paying for postage. Thus, a company will establish a petty cash fund, which is an amount of cash kept on hand to pay for minor expenditures. These funds are different in amount and purpose from company to company, but will always consist of the same three activities: establishing the fund, making payments from the fund, and replenishing the fund. For example, Rob owns a hardware store and creates a petty cash fund for small cash purchases. To do this, he must first establish the fund by writing out a check for the amount of the fund, in this case $100. The check is then cashed and is put under the care of a custodian who must look after the money. A journal entry to record this is made and is as follows: debit petty cash 100 and credit cash 100. Now Rob's business can make payments from the fund. These can be made in two ways: either cash can be taken from the fund for purchases, or employees can use their own cash and reimburse themselves from the fund for payments. Whichever is chosen, the custodian should keep the receipts from all the uses of cash as documentation. No journal entries are made during this stage. Finally, the fund must be replenished as the business has made cash purchases decreasing it, and it therefore must be refilled for further use. The receipts from the purchases are used to record the expenses, and a petty cash fund replenishment report is created, where the total amount of receipts should equal the cash requested. Rob's report shows that the fund needs $82 to level it, and the receipts also total $82. Therefore, Rob would cash a check for this amount to replenish the fund, and the following journal entry would be recorded. Sometimes the custodian will give the wrong change, have money stolen, or not keep all the receipts. This results in a difference between the total receipts and cash needed for replenishment. This difference is debited or credited to a cash over and short account. For example, Rob miscounts the remaining cash and records it as $15 instead of $18. Here, a check of $85 is needed to replenish the fund, but the total receipts only add up to $82. This can be seen in the replenishment report. This $3 discrepancy is then debited to the cash over and short account when posted to the journal. This can be seen as follows: debit postage expense 15, supplies expense 52, travel expense 10, miscellaneous expense 5, cash over and short 3, and credit cash 85. Thank you for watching. I hope this screencast has provided you with a better understanding of the concept of petty cash in accounting.
Created using Powtoon.